Dear Journal, today I made a very interesting video about journal entries. Oh, hi. Yeah, not that kind of journal entry. In this video, we're going to talk about journal entries in accounting. And we're going to take a different approach than we take in accounting class, for example. Because what I want to do is I want to give you a high-level view of journal entries because there's several different types. So stay with me and I'm going to get you through this. By the end of this video, you're going to be like, whoa, I totally get it. That's what we're going for here. Welcome to Accounting How To. I'm your host, Carolyn Grimm. That's my sidekick, Terrence. And we're here to put the fun in accounting fundamentals. The whole purpose of a journal entry is to record a business transaction. That's all it is. And the first rule of business is stuff happens, right? You sell something, you buy something, your employees come in and punch the time clock, you take out a loan, you use that loan to buy a truck, a customer returns something that they bought. Those are all examples of stuff happening in business. Those are all examples of transactions. So a journal entry is designed to capture those transactions in a way that's going to communicate with our accounting system. And each journal entry is going to show what accounts are being impacted by that transaction. Is our cash increasing or decreasing? Do we have revenue? So those are all things that we're going to tell our accounting system through the tool that is a journal entry. Now, the basic rule of a journal entry is that it is always going to impact at least two accounts. There's always going to be at least one account being debited and one account being credited. And we find those accounts that we're going to use in a company's chart of accounts. It's a listing of all of the accounts that are available to us, and those are the ones that we can choose. So you can think of journal entries like you're the sorting hat in Harry Potter. So you're going to tell the transactions which house they belong in. This one goes in Slytherin. This one goes in Gryffindor. Of course, as we all know, Ravenclaw is the best house for accounting students and accountants. Now, another way that you can look at journal entries is it's like a machine that separates M&Ms by color. You pull a lever and the red ones go that way, and the brown ones go that way. That's what we're doing with the journal entry. Now, journal entries come in different varieties. We'll call them different flavors. Unlike M&Ms, which pretend that there are different flavors with their colorful candy shells, but really they're all the same flavor. Prove me wrong. But each flavor of journal entry serves a different purpose. So a regular journal entry, what we think of in Accounting 1 and all through accounting classes and in real world accounting, when we say journal entry, we mean basically a regular journal entry. And regular journal entries are for recording regular transactions, like buying something or selling something. Now, another type of regular journal entry is a compound journal entry. With a compound journal entry, it simply means that there's more than one debit and credit, more than one account being debited, more than one account being credited. So for example, maybe you are paying two different types of expenses on the same check. So you're going to debit supplies expense and materials expense, and you're going to credit cash, for example. So a compound journal entry just has more than two parts to it. That's it. And then we have something called a correcting entry. Well, correcting entries are for exactly what you might think they're for. It's when we mess something up and we got to fix it. So a correcting entry makes our mistakes magically go away. It's very handy to have. So these are the accountant's version of a mulligan. And then we have something called adjusting entries. And adjusting entries are used to record changes in accounts that aren't part of the regular business transactions. So, for example, depreciation expense. You're not going to get an invoice for depreciation expense. So in order for that to hit our accounting system, we have to tell our accounting system that this needs to happen. So I have a whole series of videos about adjusting entries because there's a lot going on with them, and there are a number of different types of adjusting entries that you should be aware of. I mean, like if you were dating, an adjusting entry your relationship status would be, it's complicated. So our last type of journal entry we're going to touch on today is something called a reversing entry. And reversing entries are exactly for reversing something that happened before. So for example, we do something in the month of June and we want that to go away in the month of July, which sounds a little sketchy when I say it that way, but there's a legitimate reason for it, and we'll go over that in the adjusting entry videos. Now, the last type of journal entry that I want to introduce is something called a closing entry. And this is an entry that we do at the very end of our accounting period. So the end of the month, when we've done all of our other entries, this is the very last step that we're going to take. And basically, this is the magic entry that moves our net income, our profit, into our retained earnings, our equity account. So I've done a video on that as well because it's kind of a funky entry, and it's not something that we really do in real world accounting anymore because it's magically done for us by our accounting software. But for the purposes of our accounting classes, we do need to understand what a closing entry does and how that works. So if you're an accounting student, you'll want to check out the closing entry video. If you're a small business owner or a bookkeeper, you can probably skip over that one. But regardless of what kind of journal entry it is, what flavor journal entry it is, they all have the same format. We're going to have a date because that's important. We're going to have the accounts that are being impacted, and we're going to have the amounts that are being debited and credited. Now, you can't understand journal entries and how they work without understanding normal balances and the rules of debit and credit. So of course I've linked those videos down below if you need a refresher or if you're new to the whole debiting and crediting thing. So as we close out this introduction to journal entries, just understand that the whole purpose of a journal entry is that you are telling your accounting system that something happened. There was a sale of some merchandise, or you purchased some supplies, or you paid your employees. Journal entries capture that information. And our job as journal entry creators is to act as the Harry Potter sorting hat and say, you need to go there and you need to go there. Ravenclaw forever. We'll see you in the next video.